Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 26th, 2018 edition of Market Outlook. Well, I hope everyone's having a good summer. I just got back from a vacation and raring to go. So let's get through the big picture and see what the market's telling us right now. So first of all, taking a look at the four key U.S. stock indices, S&P, new all-time highs, momentum looking pretty good, some of the strongest momentum we've had since April. So our real motion indicators are helping out here. You can see new closing high. NASDAQ pausing just beneath the all-time high put in July. Momentum not quite as strong as what we see in the S&P, but still very, very positive. So net with the Qs virtually on new highs. Again, things are in gear. The other thing to note is IWM looks like one of the strongest of the key indices. One reason is you can see here our real motion indicator looking extremely positive with the 50-day above the 200, and again making new all-time highs. And you really basically took out months of compression here, and there's a lot more to run. The sort of weaker index is the Dow, but it is still in a bullish phase here and looks pretty strong. And again, the key point to watch is this 10-day moving average in the S&P. If that fails, you could have sucked in a lot of longs, and then you can see a potential test back down to 279 or so. So there's your key support level, and again that 10-day moving average, which comes in around the 284 level, is a point to watch on a shorter term basis. But again, stepping back, just taking a look, you can see on the weekly charts that, of course, the price action is intact, bull phases across the board. The momentum is very, very good on IWM and as well the Qs. So those are your two leading indices, the Dow and the S&P. The bigger cap stocks are not performing quite as well. Okay, so the next thing I want to cover here is the one of our key risk-on, risk-off indicators, and that is looking at the S&P versus utilities. So utilities being the safe play. As you can see here, over the last couple days, we regained strength in the S&P on a relative basis. So net risk-on has definitely improved. This key ratio indicates that as well. So you can see as the S&P made new highs, we definitely have improved against utilities. Now, what's interesting is on a longer term basis, we're just poised under the 6-month moving average of this ratio between the S&P and utilities. So we want to keep an eye on that. We really want to see that punch through. So in terms of, in our sort of time frame, we definitely look at this ratio. The key component of our risk on, risk off is looking at things on a monthly basis. The 6-month is interesting and important for the much longer term trend, and that's still a bit iffy at the moment, but we're poised just under it, and potentially if we take that out, that could mean a very, very strong, almost parabolic type move in the S&P. We wouldn't be surprised to see that in the near future. In terms of analysis on volume, we definitely have an improvement there. You can see we've got 3 accumulation days in the Dow, and we're definitely in a better spot in terms of number of accumulation versus distribution days, which means institutional volume is coming in. It's not enormous. So there's plenty more on the upside in terms of buying. But as you can see, we've got very few or one distribution day in the S&P, one in the Russell, and so this is a definite improvement over where we left off several weeks ago. So that's important. Plus, of course, now year to date, everything is in positive territory, and at the moment, the 1 month price change is also positive across the board. Seasonally, August often gets rough, at least 3 weeks into August. That's certainly a very sensitive spot for equities. You know, people go away, not all that convinced about what they should do, and they lighten up, and that has an effect on performance. Net, that has not happened, and in fact, all of our key indices are up. Now, in terms of sectors, things are even better. So net, the key thing here that I want to focus on is the fact that, one, semiconductors, speculative index, right, improved into a bullish phase. The other thing, right, up 4% for the week. The other thing to note is 2 risk-off type plays. Consumer staples got hurt pretty good, down 1.8% for the week, and utilities, right? So 2 clear risk-off plays, very, very weak. Risk on, definitely in gear here. So looking at the sectors, it's confirming price action across the board. Okay, moving on to market hotspots. 2 other things to note. Gold miners actually put in a potential reversal pattern. And as you can see here, gold miners, right, up 1.28% over the last 5 days. Metal miners also up almost an equivalent amount. So that's pretty positive. The other thing is that oil, also very, very strong, oil and gas exploration. So potential improvement in the overall global economy could have an effect on oil. The fact that gold and gold mining stocks improved is interesting to note as well. So it's possible that with a lower dollar, which definitely got hit over the last couple of days, that the net effect could be extremely positive for equities, better for gold and the global economy. All right, so that's it for our free version of Market Outlook. Good luck with your trading, and see you next week.